Hi, a warm welcome back. This is Sage and you are watching Kalkine TV live from the studios in Sydney, and this is the Sectoral Pulse show by Kalkine TV, a special show covering all the sectoral movements from the markets for the day. The Australian share market kicked off trade on Monday in the green, driven by strong gains from energy and gold stocks. Gold stocks rose on higher bullion prices, while Ampol and Viva Energy lifted the energy index after both fuel suppliers received a massive government funding to keep their refineries open. Energy stocks rose as much as 2.1% and eyed their best session in nearly 2 months, benefiting from a jump in Ampol Limited and Viva Energy, while higher oil prices also helped. Ampol and Viva Energy were the top gainers on the benchmark after the government announced $1.79 billion in support to keep the last 2 oil refineries operated by the companies open at least until 2030. And meanwhile, gold stocks gained as much as 4.1% after data showed US retail sales unexpectedly stalled in April and boosted the safe haven metals appeal. The sub-index was on track to record its best one-day gain since April 16th. Heavyweight gold miner Newcrest Mining rose as much as 2.6% to hit its highest in more than 3 weeks, while Northern Star Resources gained up to 5.3% and eyed its best session in 2 weeks. A rebound in major Wall Street indexes, including the tech-heavy Nasdaq, further aided sentiments. Technology stocks in Australia rose 1%, with software maker Xero Limited rising 4.4% and leading gains on the sub-index. The Reserve Bank of Australia, or RBA, meeting minutes are among the major developments which would guide the domestic market this week. In terms of major risks, the Australian stock market is expected to closely track the US-China relations, and the ASX 200 would also need to monitor the ongoing Israel-Palestine conflict. The global coronavirus situation would also be on the radar this week, especially the situation in India. And moving on to updates from the global markets. Asian share markets turned mixed on Monday as data on Chinese retail sales missed expectations, though industrial output stayed solid, while more evidence of global inflation pressures helped gold to a 3-month peak. Chinese retail sales rose 17.7% in April on a year ago, short of forecasts for a jump of 24.8%, while industrial output matched expectations with a rise of 9.8%. The spread of the coronavirus was also a hindrance, with Singapore to shut most schools from Wednesday after reporting the highest number of local infections in months. Taiwan's government on Monday had to reassure investors it would stabilise stock and foreign exchange markets. It needed amid a spike in COVID-19 cases, and stocks there were still down 1.1%. MSCI's broadest index of Asia-Pacific shares outside Japan eked out a rise of 0.2%, nudging further away from a 4-month trough hit last week. Chinese blue chips proved resilient with a gain of 1.8%, and Japanese Nikkei lost 0.7%, having also touched its lowest since early January last week. Data suggested inflation was a global phenomenon, with Japan's wholesale prices jumping 3.6% in April from a year ago, as rising energy and commodities costs ate into corporate margins. S&P 500 futures and Nasdaq futures both eased 0.1% following Friday's rally. And across the Tasman Sea, New Zealand's benchmark, S&P NZX 50 index rose 0.4% to 12,412.34. Sky City Entertainment and NZX Limited were the top gainers on the benchmark. The US data calendar is light this week, putting the focus on minutes of the Federal Reserve's last policy meeting for any clue when officials there might start to talk about tapering. And so far, most Fed members' arguments on a spike in inflation was transitory, though there was a risk it could get baked into expectations, and the University of Michigan Consumer Survey last week showed the highest expected year-ahead inflation rate as well as the highest long-term inflation rate in the past decade. The inflation scare initially saw 10-year Treasury yields reach a 6-week peak just above 1.70%. But the Fed's patience soothed the mood and yields were back to 1.62% on Monday. From the currency market movements, the dollar pretty much tracked the move in yields, bouncing to 90.909 on a basket of currencies before steadying at its current 90.397. The euro was last at $1.2135, having climbed 0.5% on Friday as yields eased, while the dollar was steady on the yen at 109.35. And meanwhile, in the cryptocurrency market, Bitcoin fell 12% over the weekend to its lowest since February after tweets from Elon Musk hinted that Tesla may have sold or will sell its holdings. And from the commodities market update, oil prices edged higher after seesawing last week as the Colonial Pipeline restarted from a hacker shutdown. Brent added 16 cents to $68.86 a barrel, while US crude rose 16 cents to $65.53 per barrel. The oil prices rose due to an increased demand in US, China and Europe and decline in oil inventories. The spot gold rose 0.9% to US $1,843.11 an ounce. The surge in the prices of yellow metal is on account of the recent correction in the bond yields. And meanwhile, iron ore prices were under pressure on Friday following a warning by Chinese regulators to local steel companies against price gouging. And the dip in the dollar combined with inflation concerns on Monday to lift gold to a 3-month top at $1,852 an ounce and cracking the tough resistance at $1,845. And now let's move on to the updates from the IPO market. Last week was quite tough for the initial public offering IPO market also, with most of the newly listed companies making weak debuts on the ASX, delivering subdued returns. And iron ore producer Juno Minerals has a forgettable debut on ASX on Friday, falling as much as 66% to 15 cents Australian in an otherwise strong broader market. Pathology provider Australian Clinical Labs was another firm that made a lacklustre debut on the ASX on Friday. The stock declined as much as 18% to hit an intraday low of $3.39 Australian against the issue price of $4 Australian. Trimming some of its early losses, the shares closed the day's trade at $3.42 Australian, down 14.5%. And listed on 13th of May, the Australasian Gold has delivered a negative return of 14.28% in 2 sessions against an offer price of 20 cents Australian. The stock declined as much as 20% to 16 cents on market debut before closing 15% lower at 17 cents. The listing comes at a time when the price of gold and the valuations of many gold mining companies have increased significantly. Building analytics company EP Global has dropped as well, 7.5% in the last 3 sessions against an issue price of 20 cents Australian. The stock started trading on the ASX on May 12th following the successful completion of its IPO, which raised gross proceeds of 11 million Australian dollars. Thanks for your time watching. That's all for now, but do keep watching Kalkine TV as we bring you the latest news and trending market updates live from Sydney. Sage signing off.